Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo, another video for the 19th of September here in 2023. We got the Fed. Tonight's video, I'll focus on the Federal Reserve. They will not raise interest rates. No change in interest rates. No change in interest rates, but it will be down to what they say about the inflation outlook and what that means for the November meeting. So that's what we'll focus on in tonight's video, but there are other stocks that are reporting earnings, including AutoZone. So let's actually start with the big picture and then talk about bonds, yields, equities. We're going to look at treasuries, of course, and technology stocks. But it was an unchanged market despite lots of volatility, with a morning sell-off, midday reversal took us right back to where we started in the S&P and the Nasdaq in general. The Russell was split. The S&P was split in its heat map, or the index products. This is the stocks in it by market cap. We had Apple up, Meta, and unchanged, mostly in Microsoft and Google. Tesla was up, but Amazon and Nvidia were down. So not only a split market, but a split in those monsters of tech. And that is ahead of the Federal Reserve. So let's talk about where we are in the market. If you're looking at the Nasdaq, in my opinion, you're getting the big picture wrong. Why? Because the Nasdaq, despite looking like it's bullish and is bullish, is, for the most part, 6 stocks. And those 6 stocks are our famous monsters of tech. Taking the S&P into account, it is bullish. It's up about 15% for the year. But this is what the broader market is, because the XLK has a bigger weighting of those mega cap stocks. That includes Apple and Microsoft, about 50% of the XLK, which is a big part of the Nasdaq. And on the XLY, we have Amazon, Tesla, almost 45% of the XLY. So if you're looking at these, you're looking at 2 stocks in the XLY, and in the XLK, you're looking also at 2 stocks. So let's not look at those stocks for tonight's plan. Let's look instead at the Russell. And I think this is a little more accurate picture of what the stock market is doing in 2023, which is nothing. Most sectors and most index products, there's the Dow, there's the Russell. We can take a look at this through the IWM, flat trading range in the middle. And if you think of it as fair valuation, we can even stretch this back beyond where we are and take a look at the fair valuation price for the Russell. And that's about the 180 per share for the IWM. That's where we are now. What does that mean to me? It means there's not really an opportunity to go long or short when a market's placed or priced right in the middle of a trading range. Short or bear opportunities come from the top, which is above fair value, and the buy or the long opportunities come from when the market rotates or trades beneath fair value. Most sectors are in that world of neither bullish nor bearish. And before we get to the Fed, that's where we'll start our stock scans. The industrials are a little stronger, but they're coming off the highs in a range. The materials, right back in the middle of the trading range. Its fair value is about 80 per share. The XLE is the one that is a little more interesting, but it is bearish with a bear position down from this 93 or 94, which is the resistance of 2023. Top of the range, yes, and that is an opportunity to play to the short side of the energy sector. And we'll keep a close watch on crude, which is also threatening a bullish breakout of its trading range. We'll keep a watch on that, as will the Federal Reserve when they tell us what they see on the horizon about inflation. P, which is staples, is toward the bottom of its sideways trading range. Healthcare XLV, also toward the middle of its trading range. Utilities, lots of lines on the chart, but all it says is at the bottom, coming back inside of its sideways trading range. So outside those 6 tech stocks, it's a range market. It's neither bull, but it's not a bear market either. It is a sideways market in an economy muddling forward. And the Fed will give us their take on that. If inflation, and it seems to be rearing its head again in terms of commodity prices going up, crude and prices at the pump, food and energy prices will be a factor in what the Fed looks like or looks at when they make their statement tomorrow. But it's going to be down to the yield. That's the big question. The Federal Reserve was expected to keep interest rates at the 5.0 level, eventually raised up to the 5.25, and in the November meeting, or perhaps December or beyond, they may be forced or may decide, if inflation continues, to raise rates to the 5.5 Fed funds rate. They do not control the 10-year Treasury note, and that yield, the way we look at it, is 4.3%, which has reached a new 2023 high. That is ahead of the Fed's decision tomorrow. So it would appear that it's in the cards that not on the September 20th meeting, but perhaps in November. And so we'll take a look at how this plays out. Here is our Fed Watch tool. There is the September meeting. Just a quick note, the current Fed funds rate 5.25%, and the expectation for tomorrow is that rates stay the same at 5.25%. But in November, in the November meeting, 1st of November, start of the month, and the end of October, we'll see a 70% chance of a stay the same. And in the next few weeks, particularly after the Fed announcement tomorrow, going to watch closely about this number. If it goes up, that means inflation, not a big deal. And the Fed will probably not be raising rates in November. But I'm of the camp that they will, as we say, jawbone, or will talk a little bit stronger about inflation and their concern and how they stand ready, willing, and able to raise the Fed funds rate to combat inflation. So if that's the announcement tomorrow, this number probably goes down. And to the extent that this projection for November and this number here, which is just simply the rate hike quarter basis point up, we've seen plenty of those in 2022 and 2023. That will push yields up. That will push bonds even lower than they already are, which is new 52-week lows. There's your ZB, the 30-year Treasury bond, and we'll push the TLT to lows, probably pulling the equity market down with it. So that will be the Fed decision, Fed funds rate, and their forecast on where they see inflation and, of course, jobs. Jobs have been strengthening a little bit, and inflation has too. So a split decision, and we'll hear what Chair Powell says and how he sees and the board sees inflation and the need for higher interest rates. Higher rates, probably not a good sign for equity futures. And that will play across the broader markets. Quick scan on stocks making 52-week lows. Dollar General, we keep seeing these. They're consumer staples. Some of them are utilities, and others are safety stocks, which would be consumer staples. But Dollar Tree, Dollar General, Illumina, ResMed, and some of the other stocks, including PFE, which is Pfizer, has pushed off and continued making weak lows and new 52-week lows in relative weakness in 2023. Other stocks have shown strength where the majority of stocks and almost all sectors have seen sideways action. So there are trending markets and there are trending stocks, but the bulk of the swing trades are sideways, not bullish nor bearish. So that Fed will announce their policy and they will announce how they see interest rates going forward. And speaking of going forward, if you have not signed up already to our Trader Retreat, just about sold out. It's a buy your ticket and book your room through this link. It's TheoTRADE.com/23 Traders Paradise. That'll take place November 2nd to the 4th down there in Delray Beach, Florida. If you haven't booked your hotel room or the flight or the others, the hotel room has a cutoff date of October 3rd. So for that discounted room rate. So please let us know if we can answer any questions, or just click through TheoTRADE.com/23. Join us not just in the chat room or here through the videos. Join us live in person, not just the instructors here in TheoTRADE, but fellow members and fellow traders just like yourself. We'll be watching markets, doing the trades, learning new techniques, and of course, making new connections, new friendships, and new trader collaborations. Look forward to seeing you there in Florida. And as always, be careful and safe. This is Corey Rosenblum with the day before the Federal Reserve, 19th of September, 2023.